Where are we in this crypto cycle? Is there even a crypto cycle? Let's have a look at what's driving the prices. Most people think that we are still in a bull market, but this channel is much more pessimistic, and we made a lot of money with that pessimism in the last few weeks. I want to show how I currently see things. Whenever we buy an asset, no matter what asset it is, we always look at the current price relative to the price that we bought the asset for, right? When we bought a house, we want to know what's the current price relative to what we bought it for. When we bought Bitcoin, the question is, are we currently in losses or in profit? And it's very prominent in everybody's portfolio, right? Either the numbers are red or the numbers are green. Now that anchor point, so the price at what we bought at, is very important because our personal behavior changes depending on that anchor point. If we are currently in profit, we might consider taking some of that profit and maybe move that to other asset classes. If we are currently in losses and we believe in the asset long term, we might simply just keep on holding, right? This is usually what most people do. Now what we have over here is the Bitcoin realized price. So this shows now the average cost basis of the market. What is that anchor point for the average Bitcoin investor? And whenever the current price is below the realized price, or in other words, the majority of Bitcoin holders are currently in losses, the sell pressure tends to subside. So it seems like this is where the bear markets bottom out. Whenever we are above, it might make sense to take some profit. The question is, of course, at what exact point in time, but at least we've got some kind of a measure when it makes sense to buy heavily in. Currently, we are still very far away from that realized price. That's currently at 43,661. So once we are below that, we should be buying very heavily. Once we are above, it's a bit more tricky. Here's the same chart with slightly more information. So again, we've got Bitcoin's price together with the realized price in orange, but Bitcoin's price is now also color coded. What's that color coding? It's the halving cycle. So whenever this switches from blue to red, that's when a halving occurred. That's when the new issuance of Bitcoin gets cut in half, when the inflation of newly created Bitcoin get cut in half. So now the inflation rate of Bitcoin is 0.85%, and there's the theory that there's a 4-year cycle in Bitcoin. In other words, the price developments are connected to that halving event. Now, how true is that? It seems like after the halving, so once we turn red here, we had a rally in 2013. We also had a rally in 2016, and we also had a rally in 2020. This time it tends to be somewhat muted. Yes, we did go up after the halving, but only by around 50%, much less compared to what we've seen in the past. This white line here at the bottom is simply the delta between the realized price and the current price relative to the current volatility of Bitcoin. So again, a potential indicator that helps us whether or not we should be over allocated to Bitcoin, right, when we are below the realized price, or we should rather sell BTC. Now, why is this called the realized price? Why is the average cost basis called the realized price? The reason is whenever we move Bitcoin, we are realizing our profit or our loss. And instead of looking at all of Bitcoin's history, we can just look at the recent past, say the last 180 days. That's what we see over here. So this shows us how the realized price is changing in the last 180 days. And we should be buying rather when we are in red, right? When people realize losses, and we should be selling when other people are also realizing their gains. We can see that at least percentage-wise, recently we didn't see that much more profit realization. So the prior bull runs were much better for Bitcoin holders. Of course, in US dollars, it's still a lot of profit that's generated because now Bitcoin is way higher than it used to be, but percentage-wise, people are making now less profit with Bitcoin compared to prior cycles. The issue with the indicator is that it tends to flag a bit too early. So have a look at the last 2 cycles. It already went red when Bitcoin was still at $7,000. And then it went all the way down to 3,300. So that was another 50% drop. I have a look at this. It turned red when Bitcoin was at around 30K. And then again, it went down by almost 50% to 16K. So it's an early warning. It's not necessarily the best indicator in the world. I think this is a bit better. So this is now the Bitcoin market value to realized value. So it seems like historically it was the best not to just look at the last 180 days and see those kind of people taking losses. It's better when the entire market as a whole has to take losses. And so that's then this chart. It flags way later than the 180-day realized price data. So again, let's just have a look at when this turned red. It was over here when Bitcoin was at $4,000. So that's way closer to the bottom. And it was over here when Bitcoin hit $22,000. Again, much closer to the bottom. Here's the spend output profit ratio. And again, we should be buying when this gets deeply into the red, when the market is capitulating. And currently the market is far away from capitulation. So this is not a historical buying opportunity. If people say that Bitcoin is now super cheap because it used to be above 100K and now it's below that, that's not necessarily true on the larger time frame. Nobody knows what's going to happen in the next week or in the next month, but when we look at the next 2 or 3 years, this is probably not the cheapest that Bitcoin will ever be, right? We've seen way larger contractions in the past. Instead of looking at the halving events, we can also look at cycles just based on the price movements. So whenever we saw a strong bear market and the price went down by 90% or 80% or over here again by 80%, whenever we have finished such a decline, we just measure from the bottom of the bear market to the rally. And then we can have a look at how do those rallies actually compare over time. And when we do that, this is what we get. So in blue, we've got era 1, the first cycle. In orange, we've got era 2. In green, era 3, in red, era 4. When Bitcoin was still small, it tended to make most during the bull run. When it grew larger, it did less. When it grew even larger, it did less. So it would be no surprise whatsoever to see the current cycle not performing as well as the previous one, right? If we do another 2x from here, so if Bitcoin was to hit 160K, we'd be exactly at the level of era 3. Is that reasonable? I'm not so sure, right? We might have already seen the top. The market is clearly maturing, and what used to be true in the past might break in the future. In the past, everybody said, if you hold Bitcoin for at least 4 years, you should be in the green. Again, because of the cycles, because of the halving events. And there are all kinds of funny ways to illustrate this. So what we've got over here is again a price chart, but it's slightly different. It starts over here and the price is at the x-axis. So the further away we are from the center, the higher the price is. And this makes a circle every 4 years. And we can see that the price was always higher every 4-year cycle compared to the prior 4 years. So it was always good to hold Bitcoin if you're in it for at least 4 years. We can see how the distance is decreasing over time. We've never been that close to the price 4 years ago on this chart. And at some point this will break. I do believe that Bitcoin will not always reach new highs on a 4-year timescale. Yes, it's likely going to creep up over time because fiat expands much faster than Bitcoin does. So the valuation of Bitcoin in fiat currency should go up, but will it appreciate as quickly as in the past? Probably not, right? We already see diminishing returns. We've already seen it over here in this chart when we compare the recovery from the bear markets. The question is always, what's a realistic long-term goal? What's a realistic growth rate for Bitcoin, right? Is it going to grow like technology stocks, 7% per annum? Is it going to grow more? Is it going to grow less? How much it grew in the past is not indicative of its future growth. What's actually long-term realistic? There are several models, but again, I believe that most models get this wrong. For example, this here, this is very popular. This shows us the stock to flow model. So this is a prediction of where Bitcoin's price should be. This is this orange line, and the actual Bitcoin price is this rainbow line here. The idea is that as Bitcoin gets more and more rare over time, as in less and less new Bitcoin gets issued, because of that additional rarity, the market cap of Bitcoin should go up. The more rare something is, the more expensive it should be. And according to that model, we should soon be hitting even 5 million in Bitcoin. I don't think that is very likely. Now, obviously, this model doesn't work, but here's a way how to identify whether or not a model is worth considering. If we see that in the past, the model underestimated the price and then afterwards overestimates the price, price, then probably the growth rate is overestimated, right? Probably the whole thing should be flatter. It seems like the creator, so that's 100 trillion USD, the creator also started to get some doubts. And so he created another version of this, which seems to be a bit more reasonable. It would call for a Bitcoin at 360K in the next few months, and we seem to be somewhat on track. And if we just hold up until the end of the 2030s, we should be at 3 million. Now, what kind of adjustment was made here? In order to estimate the fair value or the fair market cap of Bitcoin, the creator of the model looked at different asset classes. So at gold and at silver and at other asset classes. And it looked at what is the issuance, the yearly issuance on average of those asset classes, and how does this relate to the market cap of those asset classes. So that's the famous chart. So we look at gold, we look at silver, and we also look at Bitcoin during its different halving cycles. So what was the market cap of Bitcoin when it was still very inflationary? What's the market cap of Bitcoin after the halvings? What's then the market cap of silver and of gold? And what kind of future market caps can be expected as we continue more and more halvings? That's how this prediction here was made. But still, I don't really think it's that useful, because in the early days, it underestimated the Bitcoin price by 14x even. And recently, we tend to see less and less distance from that orange line, right? The tops tend to get closer and closer to the orange line. In other words, it seems like the slope of the orange line on average tends to overestimate the growth of Bitcoin. Now, what's the problem with the approach? In theory, it all sounds very logical, right? The more rare something gets, the more expensive it should be. And if there's less and less new issuance of an asset, of course, it should appreciate over time, especially if the issuance of fiat currency is higher than whatever asset we are buying. However, in the end, price is a result not just of supply, but also of demand. And if the demand doesn't grow as quickly, the price can't appreciate as quickly. According to the logic of the stock to flow model, Ethereum should have outperformed Bitcoin since its move from proof of work to proof of stake. Because here's what has happened. Ethereum has changed its tokenomics. And because of that move from proof of work to proof of stake, there was barely any new Ethereum that got mined since that change, since September 15th, 2022. Bitcoin did not change its tokenomics. It saw one halving over here, but overall the supply of Bitcoin tended to rise. Now, when the additional supply of Ethereum is much lower than the additional supply of Bitcoin, shouldn't we see an outperformance of Ethereum relative to Bitcoin since that 15th of September? That's at least what the stock to flow model would imply, right? It's all about the new issuance. But in reality, this is what happened. This is Ethereum's performance relative to Bitcoin, and it starts on the 15th of September 2022. Ethereum underperformed Bitcoin by almost 70%. So really, the main driver is not the supply, it's the demand. And yes, the story around the supply can create demand, right? When Bitcoin is perceived as the hardest of the monies and it doesn't have a lot of new additional supply, people are going to buy it more. But that's simply just one of the demand drivers. It's still the demand that moves the price. Ethereum's story around ultrasound money was not strong enough. Bitcoin's story around having tokenomics that never change and around being the digital gold was much stronger. And so what do we make out of all of this? I like to be heavily invested in crypto when nobody wants to buy crypto. When most people call crypto a scam, when most people say that Bitcoin will go to zero, that's when I want to buy. I want to get into the market when this here is flashing red, the Bitcoin market value to realized value. When even the long-term holders are realizing losses, that's when I'm buying. I'm buying after FTX collapses. I'm buying after the miners sell and the ICO boom collapsed. That's the time to get heavy into crypto. It doesn't happen all the time, and most people won't know about it when it happens because very few people are watching crypto content when we turn red. The attention is at all-time lows during times like this, but that's when I buy. I even took a personal loan when we were at 20K in Bitcoin. So I went to the bank, took 1 year of income, and I bought Bitcoin with that. And I then sold some of that Bitcoin when we hit 70K. and then the remainder when we hit 100K. So that's how you outperform the market, right? You want to be contrarian. Right now, it is contrarian to be bearish. Whenever I talk about that we might have already seen the top in Bitcoin and that it's further down from here and then we could potentially see the 50 or the 40K in Bitcoin, most comments are very skeptical of that. And that reassures me in my opinion. The way to outperform the market is to do the thing that most people don't do. Most people lose and only a minority wins. And the minority does the opposite of what most people do. And so when currently most people think that we are still in a bull market, I want to bet on falling prices. And that's how the community here is already making money now. I go so far to say that most crypto communities probably lost money in the last weeks and in the last months, because most crypto communities are just always buying. They're always buying altcoins, they're hoping for the next 10x, but when the market was already heated and then tends to contract, buying the dip is not a good strategy. Our community is making money as prices go down. And we're not just betting on Bitcoin going down, we are betting on the altcoins going down. Again, most altcoins underperform Bitcoin most of the time. And most altcoins are very weak in their tokenomics. They've got rising token supply and the demand that doesn't grow as quickly. The early investors and the insiders, they sell off. And then, of course, the price underperforms. And that's how we make money, right? We are shorting those tokens. It's not something most people do, but again, money is made by doing the things that most people don't do. It's about having a strategy to beat the market when most people are simply just getting crushed. So feel free to check it out. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video on YouTube or see you in premium. Cheers!